minutes of trade. Rajesh Kothari is joining us on this leg of the show to give us his sense on the market. Rajesh, thanks very much. Good to have you on as always. I just want to get your sense on the telecom space first before we talk about anything else. With two reasons, because one, we had the big Vodafone Idea news come in just yesterday, and today we're awaiting numbers from Bharti Airtel as well. Rima's poll tells us that maybe, average revenue per user will inch up a bit, maybe about 1.8 to 2% or so. How are you looking at telecom? Would you look at, any exposure here?
I think telecom is an interesting territory. If you ask me, we are holding some stocks in our portfolio, and I think the consolidation has already happened. And from here on, I would expect that the ARPU and the profitability for telecom players will move up, and that basically will lead to definitely better earnings growth over next 2 to 3 to 4 years. The only risk in this sector is the regulatory changes, and at times the competitors becoming very aggressive in terms of the pricing. So those are the two important things to monitor for. But for time being, if you ask me, at current valuations, we are quite positive on the companies which we are holding in our portfolio, and I think it is rightly positioned for the better growth over next few years.
Ambuja Cement standalone numbers flashing on your screen. Net profit at 369 crore. This is coming in ahead of what the street was anticipating. Revenues too slightly ahead, about 60 crores ahead of what the street was anticipating. So a bit of a beat on the revenues, but a bigger beat coming in on the profitability. Profits, in fact, are about 20% higher than the consensus expectation, the CNBC-TV18 poll. Rajesh, afternoon. Rima here. I remember in our last conversation, you said that you like specialty chemicals. You've been bullish in that space for the last couple of years. You like auto ancillaries. How have the numbers been for the companies that you've tracked so far? Did it make you add to your positions, or were there any misses because of which you decided to trim your holding?
No, the theme remains same. I think in auto and auto ancillaries, till now the numbers which companies have announced, they are more than what anybody thought of. We are holding in our portfolio, for example, Maruti Suzuki, super numbers, super surprise. We are also holding Ashok Leyland in our portfolio. Again, very good numbers by Ashok Leyland as well. So these two companies' numbers have been super. We remain positive on auto and auto ancillary as a theme. On specialty chemical side, we hold SRF in our portfolio and Navin Fluorine. SRF numbers are already announced, and again, a very good positive surprise on specialty chemical space, particularly from SRF. The capex stream continues to remain strong for the overall specialty chemical sector, and we remain positive on stock specific. Of course, within the sectors, you need to be more bottom-up opportunities, and then you need to take the right position. So that's where we are. Kindly put a disclaimer because we are talking about stocks, because the companies which you mentioned, we are holding in our PMS for our clients.
Okay, all right. Just a quick word on Ambuja Cement's numbers. The top line beat that has come about is because volumes are much higher. It's coming at around 7.7 million tons, which is much better than what the street and we were working with. We were working with around 7.5 million tons. So the top line beat has further percolated down into an operational beat as well. And the EBITDA number is looking quite strong. So good growth, 7.5% growth is what we have seen in terms of volumes on a year-on-year basis. On a sequential basis as well, it's up close to around 9%. And the street likes these numbers. They've also disclosed their cash balance. And as of now, they've disclosed the combined cash balance, which is closer to 9,000 crores odd. That as well is a little bit comforting. We'll try to get you more details. But for the time being, these numbers look good and they go down as a beat. Well, we'll slip into a short break. You come back and, we'll try to run you through the final 10 minutes of trade. Welcome back. Well, the Ambuja Cement stock is doing well. It's moved to the high point of the day as we speak. There's no worries in terms of these numbers. It's an operational beat that's coming in there. The cash in books as well is intact. And the management committee says that they're on their way to expanding capacity. So the street likes that for now. The stock has moved to the high point of the day. On the EBITDA number itself, there's a beat out there. On the top line as well, that's 200,000 tons. Extra is what they've sold, 7.7 million tons odd. Rajesh Kothari is waiting by as well. Rajesh, what about these domestic themes? And in particular, if you have any view on Ambuja Cement. Remember, the deal was done at around 385 rupees. That's between Adani as well as the Wholesome Group. It's currently at that price itself after falling all the way to around 320. At current reckoning, your view?
Oh, well, I would definitely give any stock-specific views. But in general, we remain positive on Indian cement industry, particularly because of the three reasons. One, the volume growth is going to start. That's good news because the real estate sector is doing reasonably well. And of course, the construction sector, backed by the government CapEx, is also doing reasonably. Second important is, the overall the pricing discipline, which we expect that to continue. And third, of course, the most important thing is the cost per ton, because the energy cost is coming down, and that will also others well for the overall cement sector. So the volume growth is going to be good. The profitability per ton will also likely to improve over next, 4 to 8 quarters, and therefore we believe, the sector should do reasonably well with a medium-term outlook.
By the way, there's a I think investor call tomorrow, which will